Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really glad to have with me once again Michael Oliver. Michael is on this show almost every week because of his excellent forecasting of the major markets that we are so concerned about on this show. Of course, those markets are stocks and bonds, precious metals and commodities, the things we talk about every week with Michael. Those are the major plate tectonics of the financial world, and I want to get Michael to update us on those today, as he usually does. But I also want to have Michael talk a little bit about the elections and his views of what's going on from a non-technical point of view, because he really does have a good handle on understanding economics and socioeconomics as well as anybody I know. In fact, he's written an excellent book. It's called The New Libertarianism, Anarcho-Capitalism, and you can buy that book at Amazon.com. If you enter the category at Amazon, Libertarianism, Michael's book, The New Libertarianism, Anarcho-Capitalism, appears near the top of the list. It is one of the best sellers in that area. Well, thanks so much for joining me again, Michael.
Oh, great to be back, Jay. Thank you.
Really good to have you back. Now, I just watched Yale professor and former Morgan Stanley banker Stephen Roach tell Tom Kean that Hillary is almost certain to win. I mean, he says he just doesn't believe she can't win. But if by chance she should lose, he's going to get another passport and leave the country. Are you going to leave the country if Hillary or if
I won't
Mr. Trump wins?
No, I'm very optimistic, and it's not specific to this election. There's two parts to me. There's the libertarian thinker part, and then there's and I don't allow that to mix with my technical analysis because it can corrupt it. But if you have a idea of economic factors or philosophical factors, they can get in the way of timing. Timing is.
I know it all too well, Michael. I know it all too well.
Don't let them mix together if you have that, and I separate them well. But I'm very optimistic that there is and this happens in markets as well. We're used to incremental change all the time, and in fact, it's not true. Things don't change incrementally. Most major changes occur dramatically, like clear air turbulence hitting an airplane or something. And this is the way markets move as well. It's also the way political trends and philosophical political trends occur and unfold. We can go back to the early 1900s and the rise of communism, and you can see also the collapse of Soviet Russia in the late 80s. It was like overnight. Like they pulled a switch on it. Within a year or two, bang, it was gone. China, in the late 80s under Deng Xiaoping, began to privatize and then began rapidly to do so, one sector after another. So these changes happen abruptly, and they're not like on a incremental little clock or a gear wheel. I think that the political trend in the U.S. towards statism, more and more, over the last, especially the last 50 years, let's call it from Lyndon Baines Johnson to the present, has been consistent, regardless of who's president. The power of the state rises, the excuses for new rules, regulations, new taxes, etc., always is on the rise. And it doesn't matter which party's in charge. Minor variances can occur, but basically the trend is incremental and has been intact for much of our lifetime. Mm-hmm. I think that's changing, and I think it's changing because the buildup of error, economic errors, a misallocation of resources that are caused by intervention and what I call the coercive allocation of values, which is what governments do. They coercively allocate value. They determine what's right and wrong, what you're to do, not do. They determine what you do with your money or don't do with a good chunk of your money, and so forth. And it creates errors in business decisions, errors in stock market pricing, errors in bond market pricing. Is an obvious example. And if these are erroneous, if these trends are in fact not based on reality, but are based instead on political coercion, then the error ultimately reveals itself. And maybe it reveals itself in many different ways, like the housing crisis did in 2008, 7 and 8, for example. Well, I think what I see in the markets today, the major tectonic plates again, is a movement toward a dramatic resolution. No more incrementalism, a snapping sound. And it's starting to occur, and I think it started this year early with gold and oil turning up. I think we'll see more commodity rise dramatically next year. A bond top has occurred. I think we'll see more downside in price, upside in yields there. Again, probably on an irregular basis, but fairly dramatic when you take it in, when you look at that market a year from now. Stock prices, I think, have topped. The S&P is the one rare example in the developed economy stock indices that is still floating around near its highs of, right now today, for example, where we were 16 months ago. Same price. Okay, so, and that's the strongest of the developed economy stock markets. Okay, look at Germany, look at the Eurostoxx 50, look at all the others, they're all way off their highs. So I think there's movement, and I think this movement will become dramatic and will become coordinated, which is in effect a reflection of the political breakdown of the trend that we've seen for the last 50 years plus. And I think they'll go together, hand in hand, and it will speed up the process. Again, regardless of who's elected president, I think that trend is inexorable, and I think the markets will hasten it along.
Very interesting. I just couldn't help but think you use this this picture of a plate tectonics. They move so slowly, but they keep moving in the same direction until they meet that limit. Where they can't move anymore, and then you have an earthquake, and you have a sudden jolt, and things change, and things. So if you have policies put into place, and coercion and mistakes are made, and then instead of allowing those mistakes to be cured by allowing the markets to be free, they continue to paper over those mistakes with more and more, faster and faster, until some point in time, the tectonics, the plate tectonics, the force, the limits are met, and the system comes tumbling down. That's what you're seeing, I guess. That's what you're predicting, and that's what we have seen.
Coordination between the two, the political philosophy side, and then on the other side, the economic trends, or in my case, the technical trends that I see. And I think they fit together.
Yeah. I like to say, if I had wings, I could fly. The Democrats, or let's say not Democrats, the Republicans are guilty too. The statists want to promise people things that are not possible many times, and they want to do things, and they don't let the markets work, and somehow they think they're smarter than the collective wisdom of markets. And I guess, that's hubris. That's human nature to a great extent. We all have to watch ourselves because we can start thinking we know more than we do. I think that's what's beautiful about your technical analysis. Michael, you're a very smart guy. You understand as well as anybody how free markets work, and how when markets aren't free, they don't work very well. But at the same time, you don't allow that idea, that prejudice, that viewpoint that you have to make you think you know better than the markets which way they should go. Instead, you're looking at the markets. You're basically like a geophysicist. You're reading the plate tectonics of these markets, and then the seismic, sort of the seismic readings of the markets, and then really, I guess, revering nature and then reporting on it, right?
Right, that's basically it. Same is true in political philosophy. It's you don't make it up; you discover it, and you can do it either way. And if you make it up, you end up with what progressivism or fascism or state socialism ended up as a disaster. I think progressivism is the new version of that, and it's been growing and growing and growing, and it involves both parties to some extent, more one than the other. But ultimately, it doesn't get undone, and when it doesn't get undone, it creates this buildup of error. And we've had 50 years of this now, with periodic jolts, like 2008 and the crash in the tech sector and so forth in 2000. But I think the next one's going to be multiple asset class, not one.
Where else? Who can you bail out now? The sovereign nations are the last. And Michael, I'm looking right now. I saw just a moment ago the T-bond hit 162. I mean, that's so far below what your threshold.
Within a tick or two of the low of the quarter. Yeah, they've repeatedly down on the high 161s, trying to desperately hold there. In other words, they're not excited by a Hillary victory, which is apparently what the market is excited about.
Yeah.
In other words, a continuity is what she represents. And the markets like that idea of the continuity, especially Wall Street, continuity of political corporate relationships. Crony capitalism will continue, et cetera, et cetera. And so if we can bet on the same, let's bet on the same. And that's what's going on. I bet that regardless of that, it will not continue, because the markets are telling me that we're going to have major shifts.
All right, Michael, before I ask you to comment on a couple of specific markets just briefly here, but I just want to run past a comment that you sent to me by email this morning. You said no matter the outcome of the election, people should be optimistic. Things look so bad now economically and geopolitically, so I'm asking you, why should anybody be optimistic? Just because you think nature will run its course and
in effect, human
equilibrium will be returned?
Yeah. The human mind is not ultimately suicidal. It can be up to a point, but in mass, people will figure things out. The things that don't work, and it finally hurts them enough, they rebel. They pick up a brick and they throw it. And, you know, if you get enough of that sense of, gee, I'm desperate, things aren't changing, then you want to have a tantrum. And it's not always the case that the transitions occur because a new good idea replaces a bad old idea. Sometimes it's merely the collapse of the bad old idea and people throwing bricks, if you get what I mean. And then people then figure it out after that. Once you've got the sufficient burn-it-down mentality, I'm speaking philosophically, and then you rebuild from there. And it's an evolutionary type thing. What works, you do. The Chinese have discovered this in the last several decades. They continue to privatize. Why? Because it works. They don't have a philosophical paper on it. But Deng Xiaoping privatized agriculture, and all of a sudden their disastrous crop year after crop year ended.
Yeah.
You know, so
you know, and of course the Soviet Union did that as well with private, you know, with the statist agriculture, and it was just a disaster. So we think somehow in the United States we're supposed to be a free market economy. You know, one half of every transaction is polluted with funny money in essence. Well, anyway, Michael, let me just ask you: the T-bond market. You think we've seen the highs in the bond market, and we're going to see yields? Yields are heading much higher.
The being short the T-bonds, especially the futures, is that if you ever get a stock market jolt of size, let's call it 8 to 10% rapidly, you'll get a rally in the T-bonds, a flight to safety, so you got to be careful about that. It won't be a trend-changing rally, but it'll hurt if you're short. Gold market, I think, is on track for much higher levels. This is a corrective pullback. It does not damage anything on the long-term or long-term momentum studies whatsoever. In fact, the pullback was to where it made sense, and it's begun to gel around there. The stock market, again, the S&P, the Dow, and the NASDAQ 100 are exemptions to the developed market stock indices around the world. They don't represent what's really going on there, which is decay and decline. But they're not going up either. Again, the S&P is where it was 16 months ago, and it's all of 2% where it was 2.25 years ago. So it's pretty pathetic, if that's the best that stocks can produce. And commodities in layers are advancing. Gold and oil first. Copper's taken off recently. We had some reports on it. Grains, I think, will have a good year next year. So as a wholesale asset category, by next year, everybody will realize that the commodity category is a bull.
And so I guess what you're suggesting is that the long-term or the debt markets are starting to maybe sniff out a bit of inflation already, the inflation you're talking about in the commodity markets perhaps. And so the CPI, as the government measures it, might not be so friendly. We've had inflation, of course, in the financial markets, inflation in spades, I guess you could say, with the equity markets, the debt markets going nuts as they have, essentially. But now those debt markets are smelling out the reality of higher prices, perhaps, and that's your thought, right?
Yeah, and especially when it comes in commodities, because I know the central banks wanted stocks to be elevated because they thought that would generate sentiment, and sentiment would generate the economic growth and all that, and it didn't happen. What they don't want is that monetary policy to explode the commodity markets, and I think that's underway.
Yeah. Well, the monetary ease has certainly made a lot of people on Wall Street happy. I suppose most of the people on Wall Street are voting for Hillary today because they love it. Life is pretty good for them, so just keep the booze flowing, and everything will be all right. Well, there's a whole lot of people in the middle of this country, as David Stockman points out, who aren't having such a good time, and many of them are voting for Trump today. But in any event, Michael, I love your perspective, your objective view of things. It's very helpful to me personally, and I know it is to many of our listeners, so thank you very much for being with us once again, and hopefully next week we can talk to you again.
Look forward to it, Jay. Thank you.